Move to balance sheet now then. Okay, so income, so it's going to be balance sheet more or less the same way. Okay, the only thing you have to pay attention to would be the formula and also the depreciation part. Okay, it's following the same rule. So let's take a look at the balance sheet. So let's start from accounts receivable. So accounts receivable, if you recall from the directions, it moves directly with sales. So you will have to write down the formula that we used before again, okay? So start, but it's gonna be a little complicated because we have to kind of go back and forth. Start with an equal sign, average, right? And we're gonna take the ratio of accounts receivable divided by sales, okay, for 2016 and 2015. So accounts receivable would be here divided by sales, but sales is not located here, so it's probably better you go back to the income statement, click the 2016 sales part here, right? So you have 2016 sales on the income statement, you click it. But because you are fixing, you're trying to fix sales because you want to obviously copy and paste in the near future. So why don't you click F4 twice? Whenever you're meeting sales, it's better that you always just put F4 twice in case you're writing on the performance statement. Okay. So right here you have on your formula, so average parenthesis and accounts receivable divided by sales, right? And sales you need to press F4 twice. So you have the ratio for 2016. And then why don't you write down the ratio for 2015 again? If you wanted to do that, you have to go back to the balance sheet, okay? And you want to click D8, which is 2015 account receivable, right? But then it's kind of hard because the line is too long, right? And if you can't somehow figure it out, it's probably better to click anywhere like near that and then just move with your arrow key, okay? Arrow keys that are located on, on your keyboard. You can always move with the cursor on your mouse and also the arrow key. So move your arrow key so that you can click D8, okay? D8, which is 2015 accounts receivable. And divide it by, again, go back to income statement and click D5, which is 2015 sales, right? And then click F4 twice. Okay, so you have the 2015 ratio and 2016 ratio of accounts receivable divided by sales, okay? So you close the parenthesis to take the average and then multiply the average itself by the 2017 sales amount, okay, the pro forma sales. Again, this is another sales, then you would want to press F4 twice to fix the row number, then enter, say it, click enter. So that you have 51006. Some of yours might look like this, 51005.75, like that. Then it looks a little messy. So why don't you decrease the decimal so that it's just starting with, with just not having any decimal numbers. So why don't we move down to inventory, okay? So because, once you have the correct formula, the beauty of it is that you can copy and paste to, whenever it's necessary. So accounts receivable, inventory, both of them move directly with sales, meaning that this formula can be used for inventory as well. So copy and paste to inventory, which should have a different number, whatever here, okay? And then since, if you just copy and paste, it will copy the format as well. If you want to keep the original format, go to paste option and find the second icon, which says formulas, and click it. Okay. And in terms of the original number, just change it to different decimal places. So decrease decimal so that you will have just no 0 decimal places. All right, then total current assets. Is everyone ready to calculate the total current assets? So total current assets is going to be just, it's subtotal. Subtotal in terms of balance sheet is always the sum of everything like above it. Sum, so start sum, equal sign sum, open parenthesis, just drag everything above it, close the parenthesis. If you're not really familiar with it, you can just add everything. Just click add, click add, click add. That would do as well. It's not much of time difference, so you could do it as well. So let's just move along. Go to gross fixed assets, right? Gross fixed assets. So you had 388,000 for year 2016. And on top of that, you newly purchased an equipment that's worth 50,000, right? So it's just going to be the sum of the two. So you're going to add 2016 amount and the new purchase amount of 50,000. You can write down 50,000 if you want it, but it's just given to you, available to you at B32, so you can just click it. Should have 438,000. So what you basically did was just adding the previous amount to the new amount so that you can get the new grand total, new total. That's the gross fixed assets. And accumulated depreciation. That should be whatever depreciation amount you had before, like at the beginning, plus new depreciation expense. And the new depreciation expense is available to you on the income statement. So why don't you go back to the income statement, click depreciation amounts in at B8. Okay, you just click this part and say okay. So it's just mainly adding the new amount to the older amounts. And you should have the net plant and equipment part. That's gross minus depreciation, right? This is the only part that you are subtracting, not adding. So gross fixed assets minus accumulated depreciation should be the net plant and equipment. And it should be 328,160. And then why don't you calculate total assets? Total assets is just simply total current assets plus net plant and equipment, right? You just add these two values and we'll have 454,218. All right, liability and owner's equity part, it should be even more straightforward because I'll show you. So accounts payable and accrued expenses. If you go back to direction, what it tells you is accounts payable and accrued expenses, they vary directly with sales. So what you would have to do is you just copy and paste what you had for account receivable and inventory. You're using exactly same formulas. So copy these two lines, paste. That's it. If you are done, why don't you sum everything above it? So accounts payable and accrued expenses, their sum would total 45,013. Okay, that should be total current liabilities. And long-term debt is available to you. And what about total liabilities? Total liabilities will be the sum of total current liabilities plus long-term debt. Okay. So everything here was just very straightforward. Let's see. So retained earnings. So let me just write down the formula there. Retained earnings for beginning, okay, which is the 2016 ending balance plus, right? Net income, which should be available on the income statement. Go back to income statement, click the 2017 net income minus dividend. I don't know whether you recall it, but projected dividends in 2017 was just assumed to be 0. So you just click it. Okay. So you're adding the 2016 retained earnings and the net income of 2017 minus the projected dividends in 2017. And it should give you 66,556. Okay. This is the new retained earnings balance. Total owner's equity, it should be the sum of everything above it. So it's going to be the sum of common stock, additional paid-in capital, and retained earnings, right? You just add them all, and you will have your total owner's equity, okay? And again, it should be total liability and owner's equity. So liability plus owner's equity. What did I do? Okay. Yeah, so you should have 437,869.